I don't want to say it's easy to buy a house, but like if you got a job and you can afford the payment, I mean, that's the hard part, right? But like, there's like, you got 0% down, you got FHA, you got whatever, you got another program here. And then there's also some state grants that get a little complicated.
One of the things that we're concerned about, and I'm sure it's the same thing on your end, is that if the Fed continues to cut aggressively, and I think that the cut on September 18th was more aggressive than what they had anticipated.
Yep.
Will inflation at some point reignite? If it does, rates are going to stop going down.
Yeah. Sure.
The reason that the Fed cut by 0.5 on the 18th is because I think they're now worried that they kept rates up too high for too long, and it could affect the jobs market. And if we start seeing layoffs, of course, it's going to affect the economy. I think by the second quarter, we'll probably be in a mild to moderate recession. But
wait, man, that's a big word. Recession.
Recession.
So you think? No, it's good. I like to talk about this because there is, people. Of course, yesterday Jerome Powell, he made it seem pretty smooth. He went smooth, like everything's going good, and this was just like a transition.
Dovish.
Yeah, and the reporters didn't nail him a lot. My opinion, they were.
I don't know. It's true.
But now I feel. Yeah, I have the same feelings a little bit, and now you're talking about recession. Like, what do you think?
I had a deal fall apart. The guy drove for FedEx. He was like nervous about losing his job, and he canceled.
How we're seeing GDP and the economy go, it's been trending lower quarter after quarter.
I mean, do you think, sorry to interrupt you, do you think he lowered the rate because he's afraid of recession?
Yes.
Yeah.
Because there's two, because the last time he lowered that low, it was one for COVID.
Right.
Right? And the other time was when we had the crash.
All right, hello everybody. We're here, XR Podcast number 34. I'm here with Luca Borghese with Cross Country Mortgage and Ron Riccio with Chicagoland Home Mortgage Services. Partner in crime, Greg is on his way. He's running late, While waiting for him, why don't we start? We had a big announcement on the 18th about the rate, Fed lowering the rate. So I don't know. When do you guys want to tell us what that exactly means for?
Yeah, so
for mortgage rates.
So September 18th, the Fed lowered their Fed funds rate by 0.5%. Fed funds rate is the rate that banks charge each other money, and it directly affects the prime rate. So if you have a home equity line, that home equity line is tied to prime, and that's going to come down exactly by the amount that the Fed has lowered this Fed funds rate.
So I want to stop right there just to dumb it down for everyone.
Sure.
So home equity line is like, it's not your 30-year fixed mortgage. It's a line of credit.
It's like a revolving. It's
almost like a credit card.
Like a credit card.
But the lien is against your house.
It's a lien against your house.
Got it.
So the more you pay, it goes down, and you can reuse the funds again if you want.
Yeah. So
and it's usually a second lien on the house.
So that's not your 30-year. You're going to buy a house today mortgage. It's like something that you're pulling money out of your house. Now
that's correct.
So continue. So that has a direct correlation.
That's got a direct correlation. So when the Fed lowers this Fed funds rate, that prime rate comes down by exactly that same amount, and prime is tied to a lot of commercial rates.
Yeah.
As well as credit cards,
auto loans, credit card, auto loans, all those short-term loans, short-term
correct
bonds.
And usually then the mortgage rates are not directly related to what the Fed lowers. So mortgage rates are traded in a mortgage-backed security market, which is similar to a treasury market, where they trade on a day-to-day basis based upon economic reports, geopolitical news that comes out. So our rates, everybody's rates, Luca's, buying, everybody's rates had come down already in anticipation of what the Fed was going to do.
They were already being priced in.
Yeah, so very important because we get this a lot, because I hear this a lot too, is when they hear, like, let's go back a month before the 18th or 3 weeks or whatever, they're like, oh, the Fed's going to lower rates. A lot of people are just like, well, I'm going to wait because they're going to lower the rate. However, the rate's already factored. Once that news hits, the market reacts. So if you wait, you might actually hurt yourself.
Yeah, actually, yes. On September 18th, when the Fed did lower rates, that day, mortgage rates were actually slightly higher.
Yep.
They were flat to slightly higher because it's more like buy on the rumor and sell on the news. So this had already been factored into the market. And now it was the days after that, the market kind of settled down, but it's already been it was already factored into what the Fed was doing. So we were seeing rates down as much as 1% from where we potentially had seen them in June.
Yeah.
So it was a pretty dramatic move, and hopefully we're going to continue to see much of the same. But you're absolutely right. There's a lot of people that think that what the Fed controls are mortgage rates, and it's a lot of free advertising to us.
Yeah, it is.
You get a lot of calls, right, Luca?
Yeah, some people say, is my rate to drop a 50 basis point? No, it's not. The mortgage rate didn't drop a 50 basis points. Obviously, there is no correlation between what the funds rate does with the mortgage rate, but eventually, later on, the mortgage rate will follow the same trajectory.
Yeah,
It's the 10 years treasury bond that we are looking at how it's behaving into the market. The lower it is, the better it is. In the past couple of years, everybody knows, Rance knows, we added the so-called this inversion yield curve, that the 2 years bond was more profitable than the 10 years bond. So if you want to put money in the bonds, usually the longer you wait, the more you're gonna make.
Yeah.
But it has been this way. Now the kind of like is returning to the normal,
Right.
little slowly, but we are getting there. We are getting to what is called the normal business.
Yeah, and what you're going to potentially start seeing now is that prior to this, that inverted yield curve where the 2-year note was higher than the 10, we didn't see any real good adjustable rate mortgages. Now, as the Fed cuts rates, we're going to start seeing adjustable rate mortgages become more attractive. They'll actually be cheaper than a 30-year fixed.
So like you're talking like smaller banks that do balloon loans.
Yeah, even Fannie and Freddie.
Freddie, I guess I should say
even
small bank. But like balloon loan mortage, ARMs.
ARMs.
The 5 years, the 3 years, or the 7 years.
Those will be cheaper.
Yeah, so for the past 2 years, it's almost been non-existent on the mortgage side.
Yeah.
You'd have to see a portfolio product, maybe at a bank or maybe at a particular lender, but anything that Fannie and Freddie bought in the last couple of years that was an ARM was priced higher than a 30-year fixed. So now as the Fed starts lowering rates, those are going to come back more into line. So you should see them be a little bit lower in terms of the interest rate than a 30-year fixed.
So we got let's go back my last 2 years or year. It's all cloudy for me now. A lot of people I did deal, they got, I think the highest, one of the highest was like 7.8, 7.75 rate. Yeah. Like, what's the rule of thumb where they should refi? Like,
I mean, now the rates are more
favorable. It's a tough question. It's a golden question.
I mean, the refi.
Like I tell people, if you go from, let's say you're at 7.5, if you can get to 6.5, do it. Forget about the future. If it comes down, because. So I'll going back to the announcement on the 18th. I think, correct me if I'm wrong. I just heard it. I'm hearing it from just talking to people in the industry. They did say they're going to do 4 cuts in 2025.
Well, it's going to be another cut.
Potentially 4. But they've been saying they were going to do 4 cuts last year, too.
Well, at the beginning of 2024,
it didn't happen.
6.
Well, now what happened to the Feds? They need to catch up.
Well, they do, but just because they say it doesn't mean they're going to do it.
It doesn't mean that. Yeah. But a lot of people are speculating that there would be more cuts this year.
So what do you reckon? Back to the golden question is like, let's say my loan's 7.25 right now. I'm sitting here. When do I pull the trigger refi? Is it half? Is it? I mean, I know it's a lot tied to how much you've got, how large the loan is.
Yeah, it's a little different for every situation because if you have a $500,000 loan and you can cut your rate 0.5%, that could translate into a $250 or
$300,
$300 a month. So then it all depends on what your cost is. If you can get a credit from the lender to cover the majority, if not all, the cost, and you're saving this money immediately, then it's good for you to do.
Good for you, yeah.
I think a lot of people get caught up in saying, I hear this, hey, it's got to drop 2%, this 2% rule. Well, this 2% rule was
2 points? I mean, from
2
like
points.
7, that's a lot.
So, but this 2-point rule was put into place in the 80s when rates were high, and back then, average loan amounts were below 100,000.
Yeah.
So that doesn't apply to today. Today, you maybe have an average loan amount that's going to be about $300,000. So you really have to kind of look and see what makes sense. What's your trigger? What's your target point? And what I'm doing with a lot of my clients is we're getting them lined up and saying, hey, what do you want to save on a monthly basis? let's see what we can do in terms of keeping those costs down or eliminating them completely with a lender credit. And then as soon as it hits that target, we go ahead and get them locked in, we get them started, and then we watch. You know, after
Yep.
we've closed, we watch because I've already closed a dozen refis this year, and the Fed just lowered rates. So that's because we had people in the upper 7s and in the 8s that bought in October of last year. And we want to bring them down because one of the things that we're concerned about, and I'm sure it's the same thing on your end, is that if the Fed continues to cut aggressively, and I think that the cut on September 18th was more aggressive than what they had anticipated.
Yeah.
Because the week before we had some inflation reports, CPI and PPI, that came out just a touch hotter.
That's higher. What's 0.1%?
Than what they were expecting. Yeah. And I think the markets were not really expecting a 0.5 point cut. But the concern is, as the Fed cuts, will inflation at some point reignite? If it does, rates are going to stop going down.
Yeah.
Sure.
I mean,
mortgage rates are going to stop.
We don't
going
want to
down.
see that. Well, hopefully, it's
we
not
don't
going to
wanna-
happen.
Do you think do you guys think it will?
It's hard to say. I mean, it's.
See, here's the thing. Here's the thing that could change all of that, and it's got nothing to do with Jerome Powell and the Federal Reserve. You know, it depends on what happens geopolitically in the world. Depends on who's in office, of course.
Yeah.
Well, if you get a spike in oil prices, right? Oil prices filter in everything. Transportation,
Yeah.
they're in plastics, they're in a number of different things. If oil prices spike, then that's going to bring inflation up.
Yeah. Everything is related to energy. If the energy price is up, everything's correlated.
Really?
You go to the grocery store. When you pay, you need the company needs energy or fuel to bring the product to the shelf.
It's directly in
if
transportation.
this is up, then the mortgage rate they're going to
rate's
stop stop slowing.
And that's what we're telling clients. We're like, listen, take advantage of what's here now.
I always say, if it's
Yeah.
here now, you got it.
Yeah.
You don't know tomorrow what's going to happen.
If you can afford now, just do it.
Right.
Just do it. Eventually, you're gonna. If the rate goes down, you can refi again. You know.
Yeah. Like if
Like, there is
if
a-
you go
this-
7.5 to 6.5,
We-
do
we-
it. If
we-
it goes to 6,
We have
5.5,
this great
makes
things
sense.
at cross country. It's called. You probably know what that is. It's called Streamline FHA refi.
Sure.
It's no credit qualifications, no income verification. I did like 10 of those, and the rate I had people with 7.63%, and I locked them at 6.1%.
So streamline, just so everyone knows the lingo. FHA, that means they bought with FHA.
They bought for FHA.
And then they're gonna just refi. You know, a lot of times people want to go from FHA to conventional, get rid of the PMI. But let's say they don't qualify still for the conventional.
Yeah.
There's a product, Streamline
Streamline
FHA.
refi, it's a no credit qualifying.
So
you just-
no income verification.
And Streamline.
No appraisal.
So you
No
just
appraisal.
so boom. You're
Yeah.
just lowering your rates. I mean,
just lowering your
How do you get? Is there any way to get denied with that? Like if I bought FHA, is there any way I could get denied?
You have to have a certain minimum FICO.
Okay. So if I just stop paying bills and
Right.
my FICO's
So
like
you have to-
560, it's over.
And the Streamline's also available on VA loans. So
On
it's
VA
their
loans
government-
and USDA too.
Yeah, so they're government-backed loans. So you don't need to show any income. You don't need to have an appraisal done.
And no credit pulled. Only just the mortgage
Right.
history of your on the credit report you can always show. But there is no there are closing costs. The only thing that you deny, nobody will deny it, that you can afford it to pay the closing costs, which is not really a lot.
Yeah.
Like,
Well, I
maybe
mean, I
couple
always tell people with the
thousand
closing
dollars.
costs, it's like you're skipping a month.
Yeah, you're skipping a month.
So
that
you could-
save
you
and
could
then-
just-
The only
instead of the
thing on
payment,
a
you could roll
streamline that you can't roll in closing costs into the loan amount.
Correct.
So since we're on that, are we doing? So we got FHA Streamline. Anything else new? Lender products.
Well, I have through one of my lenders that I deal with, being I'm a broker, I deal with a number of different companies. We have a 30-year fixed, 0% down mortgage for first-time home buyers. So
Is there income what's the qualifications of that?
So typically they want to see a minimum FICO score of 700. So 2 out of 3 scores have to be 700. And the maximum debt to income ratio is 50. So when it's not a grant,
So you have to have really good credit.
you have to have good credit.
Yeah.
You have
I
to
mean,
have good
above
credit.
700 is pretty.
And it's similar the way we offer the cross country have their own proprietary down payment assistance, which there's no repayment agreement, there's no income cap, so you can make as much as you
So,
want.
yeah,
And that helps.
I know sometimes I get like you know, especially when you watch this political stuff, it's like, I don't know. It's pretty, I don't want to say it's easy to buy a house, but like if you got a job
I mean,
and you can afford the payment, I mean, that's the hard part, right? But like, there's like, you got 0% down, you got FHA, you got whatever, you got another program here. And then there's also some state grants that get a little complicated.
yeah, the state grants we offer too, but it's
I'm not a fan. I'm not a fan. Just like that's for people. To me, that's for people that really like, because you end up paying it back on a lot of them. So
Yes.
I always try to tell people like, hey, if you really need to do it,
we have, for example, there's this CRA Community Reinvestment Act that we are exclusive across country with the Chase. Because Chase need to lend, and they got cut now lending in a lot of areas in Chicago and Illinois. So now they are forced to lend to people with a very advantage rate.
Yeah.
So, and it's called the Chase Community Lending. And we are one of the exclusive on that. We can offer, if your house, if the property that you want to buy is located in one of those areas, you can get advantage of the rate that they offer, which is a little bit slower.
so yeah, so it's just
everything else.
it's really that's kind of what like. So sometimes it's frustrating when people that they hear this rhetoric of like.
You were saying about buying a house, if it's easy or not. It's, what
I'm not
happens
saying
is
it's easy. It's a stressful process.
the
It's not
client
easy.
needs to
I'm
find
just-
a good professional like Ron, like me, like you, that make it less stressful.
Well, you gotta know. You got. Well, you gotta know how to.
That's
You
right.
gotta know how to
That's
navigate.
right.
You gotta know how to navigate. And my point, what I was going back to is like, there's a lot of things out there that you could get there, and if you're not there with credit wise, you just get a plan together. I know you've done it. He's done it. They just put like,
Absolutely.
hey, all right, the next 6 months do A, B, C. The problem is you got to do A, B, and C.
Yeah, there is a credit repair situation.
Yeah,
If that happens,
you
there's
do
a way to
ABC,
do it.
You do A, B, C, and you can
Yeah.
get there. So rates actually went up after the 19th. So we'll see what happens.
So they went up slightly that day. So I think the general consumer, the general public immediately thought mortgage rates dropped 0.5%. They had dropped already in
Yeah, it's
the
speculative.
previous,
Yeah.
let's say 4 to 6 weeks, almost 1%. And now that day, when it actually happened, nothing really happened. We actually saw rates trend up slightly that
Yep.
day. And, the days that followed, things kind of settled down after that. But, keep in mind here, I think this is the first Fed rate cut. So if we don't have inflation in the future, so if we continue moving forward and
To the
inflation
to the famous 2%.
the famous 2%. If that continues to happen, then we potentially are going to see another 0.5% rate cut before the end of the year. Maybe even a third, maybe not a third, 0.5%. Maybe it'll be another full 0.5%, and then maybe a quarter. And then it's all really data dependent on what's going to happen in 2025. They're going to closely watch. And the best report, and I'm sure Luke would agree with me, is that now the Fed has changed its mandate. So before it's like, hey, we got to get inflation down, inflation down. Now they said, hey, the risks are a little bit more balanced to where we're worried about unemployment.
Yep, that's why.
So
and that's why they cut the rate because of that.
And that's why I think they cut by 1/2, because everybody was kind of really taken back. They may know something that we don't know. I mean, they may have more information that we don't, where maybe they're concerned a little bit more about unemployment going up. So, the big reports to watch, the big unemployment report is the first Friday of every month.
And strangely enough, today there was the job report, the jobless claim. It was actually lower. Than, So it's a good thing, but
it's good, but for rates, it's not good.
Yeah.
For rates, it's not good, but you also have to kind of keep in mind is that the way that the jobs report has come out, even over the last 18 months, is that there's a headline number in terms of job creation.
Yeah.
Like they'll come out and say, okay, we created 200,000 jobs. Then the following month they'll come out and they say, we revised that down.
Yeah, there's always a revise. They're not really precise on that.
Yeah.
So, and sometimes they revise it higher, they revise it lower, and there is not a good direction sometimes.
We had, so in 2024, we actually had almost 400,000 negative revisions into all of 2024. So the jobs report was a lot weaker than it initially was thought. So all of our rates were all based on a much higher.
Wait, hold on.
Much higher amount.
Greg's here. Greg's here, finally. All right, let's go. We made it.
How are you, sir? Thanks for coming. Sorry I'm late.
See, no, this is.
Let's tell it the proper way, you know?
Let's,
It's all
all right, when you guys are done, when you guys are done kissing.
We're all Italian here, you know?
You got a biscottino,
Anyway,
too?
I did get the biscottini.
Yeah, Rob bought cookies.
Thank you for bringing cookies.
And just for the public, you know, so just Greg does work. He doesn't just make videos. You see, he passed up a video to work. So this is so just in case there's any rumors out there.
Yeah, so
we got it here.
Yeah.
So we've been we'll get you up to speed. We just been talking rates. There was a big cut on the 18th.
So I was gonna say I was late because of the Fed.
You don't get it.
They cut the rates.
And you
so
were
now
right.
I
Stop talking.
you know?
I got your story. You don't need to.
I got a lot of business. They got a lot of business
We're
now.
no excuse. You
Then they start calling. Hey, it's the rate to drop a 50 basis point.
pretty much what happened, you know?
So anyway, we're
But
talking.
so what's going on? So
No, we're just talking rates, so we're talking like how it's factored in. But now that since Greg's here, we'll talk more market. Like, what do you got? How is your fall? We're in the autumn market. How's that going for you guys?
Well,
is there a refi boom?
There is some refi situations right now because there is a lot of client and mine and obviously Ron that we have a rate like into upper 8 and above 7, and then now can be more favorable for them to save a couple $100 as long as that it makes sense to them. But
What about you? Refis, purchases? How you looking?
We are the fall has been actually been pretty good, and we are seeing quite a bit of refi interest right now. I mean, as Luca was saying, we've got clients that are in the upper 7s and even in the 8s, and now we've got some 30-year fixed rates that are even in the 5s. So we were getting a lot of activity. I've probably closed already, maybe 12, 15 refis already to date because things had already started coming down, and people are taking advantage of it, and then we just continue to watch for the future.
So sorry, I'm going back.
No,
off subject,
please.
maybe. I know I was missing, but so the Fed, of course, lowered the rate. So you were saying that 18 there's going to be a.
No, 18th was they
18
lowered
was
it.
yesterday.
Yeah, they lowered it.
So it's going to affect, and I mean, it was priced in already, right?
it was priced in.
Actually ticked up a
They're
little.
not correlated, they're not
Yeah,
correlated.
correct.
But eventually, like I was saying, the mortgage rate will follow the same trajectory.
Okay.
And it's not going to be right away. It's
You
going to
think
be.
it's going to lower a little bit? There's going to be a little bit?
It's a data dependent, like Ron was saying. Depends on the job. It depends on the geopolitical stuff.
Okay.
The elections.
Okay.
They're all correlated on that.
I think if you watch the big report we were just talking about, Greg, was to watch the first Friday of every month as a jobs report. If we see unemployment go up and we see job creation come down, you're going to see rates move down pretty fast because that's the one thing. The reason that the Fed cut by a half on the 18th was because I think they're now worried that they kept rates up too high for too long, and it could affect the jobs market. And if we start seeing layoffs, of course, it's going to affect the economy. The good news is, if we do hit a recession, and I think by the second quarter we'll probably be in a mild to moderate recession. But
Wait, man, that's a big word. Recession.
So
you think no, it's good. I like to talk about this because there is, people. Of course, yesterday Jerome Powell, he made it seem pretty smooth. He went smooth, like everything's going good, and this was just like a transition.
Dovish.
Yeah, and the reporters didn't nail him a lot. My opinion, they were.
I don't know. It's true.
But now I feel. Yeah, I have the same feelings a little bit, and now you're talking about recession. Like, what do you think?
I had a deal fall apart. The guy drove for FedEx. He was like nervous about losing his job, and he canceled. But go ahead. Sorry.
Okay.
Just throwing it.
No, I mean in terms of how we're seeing GDP and the economy go, it's been trending lower quarter after quarter.
I mean, do you think, sorry to interrupt you, do you think he lowered the rates because he's afraid of recession?
Yes.
Yeah.
Because because the last time he lowered that low, it was one for COVID,
Right.
right? And the other time
08.
was when we had the crash.
Yeah.
Those are two times when it dropped a half.
Yeah. So Jerome Powell, he was in charge during COVID. So it was March of 2020 when he did his first rate
Correct.
cut.
Yeah.
Back during the market crash, we were looking, back then, there was a different Fed president that was in. And again, they also, wanted to be aggressive in trying to
boost
start
the market.
off, a really big recession. But the one thing that I always emphasize to my clients is that in a recession, real estate prices hold up really well. And that's because interest rates come down.
Yeah.
And if you were to look over the last 50 years, you take out the 2008 crash that we had, but if you look,
I know,
prior
but
to
people say
that-
take it out, but we can't take it out. It's still there.
Right, it's still there. But
We got to affect it. You know what I mean?
if you look at all the other recessions prior to that, real estate held
Right.
up great
Yeah, it
because
did.
rates come down. We get buyers that come into the market and support it. And I think we have a very unique situation now going into this recession, which I think will be potentially the second quarter of 25. We have a very limited amount of inventory.
Correct.
Yeah.
Correct.
So this is even more advantageous to real estate and real estate prices staying, supportive of where they're at now. And I think if it's a mild recession and we get rates lower, potentially, I mean, just looking at how they're going now, I mean, we were down by 1% even before the Fed lowered rates.
It was already priced in.
Yeah, I think we could get into the upper fours
Yeah.
here in next year.
Really?
I mean, the
Yeah.
rates, I think that too, my opinion. But the big thing on the pricing, I do feel you're right. It's going to open the market probably a little bit too. I think it'll be better for everybody, and the value is going to maintain. But the jobs, if we have jobs and everything keeps up well, it's fine. But if there's more layoff, and things start being a little bit shaky, then it could affect a little bit the values.
It's gonna be the mindset of the consumer, because if you begin to get, let's say equities, let's say stocks start coming down, and you start seeing jobless claims go up, and then you begin to see people just having a different feeling, they may step back in terms of doing a big purchase. In terms
Yeah,
of
they
real
might be
estate.
like, okay, maybe I'll just stay put.
But the one thing we got to keep in mind, though, is that back during COVID, unemployment at one point hit almost 14%. And we were going nuts.
Correct.
Rates will drive people.
I mean, but COVID was a little weird, right? They're sending free money, there's free rents, there's a lot of stuff going on.
was, but a lot of those-
Even if there was unemployment, they kind of like, it wasn't real, in my opinion. I'll tell you the truth.
Well, I think the unemployment was real, and the people.
No, I mean, it was real, but it was like.
It was not a long-term unemployment, because after when the pandemic, let's say,
Yeah.
was over and everything was open up, then all these people that they were laying off temporarily, they just came back into the job.
They came back.
And,
Or
they start working.
A lot of the people, though, that got, let's say, a stimulus check or the PPP, a lot of those people didn't buy homes. You had a lot of people that earned quite a bit of money, that saw rates came down, and they turned around and they bought.
Yeah.
So I think for unemployment, for it to really affect the real estate market, you would have to see very elevated levels of unemployment for a long period of time.
Yeah.
You have to get that imbalance of having more sellers than buyers, and right now, we're just not seeing that.
Yeah.
Right now, I feel like there's a fury of people that are on the sidelines that are now just waiting for rates to come lower, and they're going to be calling you guys saying, hey, we want to buy a house.
The problem is when they come lower, then there will be a bidding war. They will encounter this problem.
That could happen, but also there's going to be more sellers. They're going to
More sellers that
Come
are-
into the.
They're going to do
Well,
the upgrade. They're going to be
a lot of
like,
people
you know
don't want
what?
to give away from they can't get. They
Do
have
that? Do that
3%,
drive the price
4%.
up? If let's see, there's a lot of
There might
sellers.
be more inventory.
There will be more inventory, and
might be.
I think they will drive the price a little bit up.
I don't know. It could balance out. Like the price up, like yes, bidding wars, everything could drive the price up. But at the end of the day, people got to be able to afford it, right?
Yeah.
I mean, right now I feel like I feel like we reach like a max.
A plateau?
Yeah, even
A little bit
even with
slow.
rentals,
With
we
rentals,
see it.
it's like they kind of
Like people, like they're making a lot more money from years ago, but now it's like how much more they're gonna make. So how much up is gonna go? In my opinion.
And I think if prices can moderate and stay around these levels, I think that's a good thing. I mean,
Correct.
I think so too.
I think it's good. I mean, I don't
Steady market, right?
Yeah, I don't particularly like seeing, prices go up at this level, because I think here in the Chicagoland area, and I'll argue the point with anybody, you probably saw in certain areas, it was probably 10% appreciation per year. Not this.
But compared to the rest of the country, it's conservative.
Well, I mean, I think the averages that you see, like from, let's say, Case-Shiller or Zillow or even Fannie, the FHFA, that come out and they say, hey, we were between 6 and 8%. that took into account also areas of the country that had negative appreciation. So I think here, I mean, if you guys have a nice listing for 400 and it sells for 440, okay, that's 10% over ask. Then you get the next listing that comes up, they list it for 450, that goes over ask. So that continues. I mean, it's got to be around here in these areas in the greater metropolitan area. We probably saw easily an 8 to 10% appreciation.
Yeah.
And if it can hold,
We did.
you know,
I agree.
I think if it can hold, even as we go into a recession, I think if it can hold, I think we'll be fine. But
And I think that's the reason why they dropped a half yesterday, because he knows that we're going into that probably, and he's worried about the jobs. And he's like, you know what, let me drop half so we could remain steady and not create panic later on.
And strangely enough, I was saying we got a report that the jobless claim today was actually less. So people are less getting unemployment. So which is a good thing for the job, but not so good for the mortgage world. But hey, we hang in there. Let's see what's happening. And
What about, I heard rumors of just to explain the public too, when I say this, stagflation? What is that, Ron? Let's talk about it a little bit.
Stagflation is when you have very high levels of inflation and you have a lot lower economic activity. So the GDP goes down almost zero, but you still have very high levels of inflation. And that's actually very bad for the economy because it really hurts people's buying power. So low levels, so that's really hard to get out of. So part of the reason that I think the Fed kept rates as high as they did for as long as they did, because they want to get inflation down. Because even if inflation's low and the economy goes into a recession, they can then juice up the economy by lowering rates as they did. But if we start seeing inflation go up now, they're in a bad position.
Yeah.
If inflation goes up, then they have to stop raising rates. Mortgage rates will automatically come up by themselves.
Yeah.
And then that'll put us in a really tough position. So that stagflation, high levels of inflation with low economic activity is not good for
That's
the
not
economy. It happened in the early 70s here.
I think they're starting cutting a little late. I think they should be cutting maybe in July. That's I think it will be. It was best, but they're catching up now.
That's what a lot of people said.
I know your time is short, Ron, but I wanted to get. We did a podcast yesterday. We kind of touched on this NAR situation.
Sure.
So you work with a lot of agents, both you guys. Like, have you seen anything odd out there? Because from our part so far, it's been kind of the same. But I know you said you had some kind of.
Yeah, we had. For the most part, most of the transactions, sellers and listing agents are accepting people's request for payment of real estate commission. Sellers are paying. But I had one recently where I was on the email, or he came back and said, hey, we've accepted everything, the price is fine, but we're not going to pay the real estate commission to the buyer's agent. And
it was over asking.
And it was over asking. So I've seen it on a couple of transactions already, and the deal didn't end up going through. My buyers were going in with 3% down, so they didn't have the money to pay the other side. They actually went in over ask. At one point, it was probably $15K over ask, which would allow the seller to have paid the buyer's agent. And it just didn't happen. So I think in today's market, if it shifted to a little bit more of a buyer's market instead of a seller's market,
it is usually.
Things would then end up being.
But that was only one out of how many? I mean, that's only one.
Yeah,
so
exactly.
I thought it was interesting.
Well, so far I didn't see. So far it's business as usual. The seller is paying.
We're about a month.
Yeah, the seller is paying the real estate commission, the realtor commission. Or actually, they want now it's not commission anymore. They want it to call compensation.
That's right.
I mean, it's all dependent on
the other way, one way around is just to if the buyer doesn't have the money to pay, if the seller says no, I ain't paying it.
Right.
It's the ability to find like free money, down payment assistance, stuff that can benefit the buyer to have the fund to pay the realtor.
It seems like, you guys got to tell us, but it seems like as long as the seller's getting a bottom line number.
It's about the net.
About the net, right?
It's
then
about the net.
They're willing to pay.
Because I've been multiple offers, put it on there. Sometimes they tell me they're paying, sometimes they don't say nothing, and I've gotten it accepted.
And
So obviously they're looking at what the net is.
do
What's the net?
you guys right now are starting to having those borrowers sign a compensation
You have
agreement?
to have them sign something.
How this is working? How the
Before
people
you show a
are
house, they have to have a buyer agreement.
how the people are reacting to this?
So far, not too much pushback. I mean, obviously they don't want to be on the hook for it, but
Right.
so far not too much pushback.
I mean, at the end, the goal is to have the seller pays for.
The goal is to get the buyer into the house, right? And
I
get them
mean,
at
because the
best
seller say, hey,
price.
if you don't pay, if you don't pay, you're gonna have a hard time to sell your property, at some point. But there will be some seller that says, hey, I don't want to pay anything. I just want to pay you, and that's it. And then the other one that they figure it out.
We work it out. So
Well, gentlemen, thank you. I'm sorry I got to run, but it was great seeing you guys. I'd love to do this. Love to do this again.
no problem, man.
We'll keep up on what the Fed's doing here. So
Yeah. In 2008, when the crash happens, actually, I bought my first house with Greg and Frank.
man.
But you have a great history besides our friendship. You have a great work history. Like think about it. Like you came here, you start working as a salesperson.
Yeah.
Right?
Then I did finance at the same dealership.
But the salesperson, you moved up.
Yeah.
Right, because of relationships.
Because of relationships.
Because you're a people person.
And it was funny about relationship
Yeah.
because when I was selling cars, I was using this finance company.
Yeah, exactly.
That one day out of the
Yep.
blue, they called me. Hey,
call
you want to work for us? You've been giving us a lot of deals. I think you've
But
been.
there's a reason for
there's
that.
A, there's a
because
reason
they-
for that because
they liked how.
the work ethic was the one that they were looking for,
Yeah.
and I went with them and I worked with them for the past 17 years. So then they. Things changed. And,
Of course. No, but I mean...
Then I met Greg, and one day Greg, hey, I have a question. Well, what's going on? I was in a gym when he called me. And I says, I mean, there's a lot of people that are not really that great to doing this. Why don't you do the loan officer? And he made me think about. And now I'm here. And now I'm a loan officer. And it was thank him that I'm doing this. And
No
it's
offense,
really great world.
I didn't say it that way. I said that you're...
Yeah, I mean,
said-
he didn't say that way. I just make it sounds much, much better than what he said.
Yes, I said, I know you, I know who you are, I know your work ethics, and you're a smart guy to figure stuff out, and I think you could beat a lot of the competition out there,
Yeah, and that thing I still have that phone call. I remember the phone call like word by word.
And now you're here today.
And I'm here today.
So, but it's cool. That's cool. But when you bought your house, let's go back to your house because I was a realtor and I represented you. It's hard to buy a house for a lot of people right now, right?
Yeah.
You were young. It was you and your wife. You probably had to fix some stuff because a lot of houses that people are finding right now, right, Frank, is like they need a lot of work. It's
Well,
not like,
I think what's happened is when you have the affordability, the price when you have the prices increase like this, affordability gets so competitive.
Yep.
And what's really sometimes what's left is the stuff that just needs a lot of work. So anything that's somewhat affordable, that's move-in ready, it's out of reach for a lot of people. So then what's left over is like, man, people go like, oh my gosh,
a lot of work,
There's a lot of property out there that need some work, like you said. And people say, oh, I don't like it. I would like the kitchen look this way. I want the living room look the other way. I want a swimming pool. I want.
Well, maybe not the pool.
besides the swimming pool.
I mean, there's people that don't, but there's
No,
people
I
that
know.
want that.
I know.
There's people that are demanding it. So,
But even the basics, right? Like you found your house was like you're blessed. You found it was decent.
It was
Maybe
decent.
you had to do some work. I know.
I
You had to
did
do some work.
you know.
And maybe you had some money saved, or maybe you found a different loan.
yeah, what happened
But-
is that the reason why I bought it, it was because I had a property in Italy.
Property, okay.
And it was the year that the euro was really
Great.
high. Like for a euro, you had to pay $1.75.
Yeah, you're right.
So when I got the money sent in, it was like almost double. So I was be able to put a big down payment.
The big down payment,
Because that's what
So you
Greg
able-
suggested. Just
Yeah.
man, just put a big down payment. Don't put the minimum. It's better. You're gonna finish faster. The
Yeah.
payment is gonna be lower.
Yeah.
And
And
I'm actually blessed that I found it.
Yeah.
Because
You're welcome.
because
You're
the
welcome.
payment is actually affordable. Obviously, we have some Texas situations.
Of course.
But these things come. It's
But
you have
you're
to factor.
comfortable.
We have to factor in.
You're comfortable
You're
and
comfortable,
you're not
and
going
yeah,
nowhere.
I'm not
Yeah.
going
When,
nowhere.
when you
now.
said taxes, you mean your taxes went up? You're talking about?
Yeah,
Yeah,
of course.
yeah.
But
Probably double.
back to that. Like, thank God you put a lot down because I know some people the taxes go up and all of a sudden they can't afford it anymore. If you put less down, then
Yeah.
you'd be in trouble. So,
Yeah,
but anyway.
and there was always the myth like, hey, if you don't have 20% down, you can't buy. It's not true.
You could buy.
You can buy even with less money.
Okay, so let's say now I got a buyer. We're gonna buy with like 5% down, right? They accumulate some money, you know, they tried and they have 5%, and it's okay. But the house now needs a lot of work,
Right.
And they can't find nothing. We want to get them in a house because it's still better than renting,
Right.
And it's still good for them too, just like you did. They'll build equity, and later on they could even refinance and et cetera, et cetera. But at least, you know, have a house, right? Own a house, have an asset,
Yeah, definitely.
and start like, you know, save, not spending their money, you know.
In another stuff. Yeah, I mean, with,
But they still want that house, but now they want to fix that kitchen because the kitchen's destroyed. Or the bathroom. Like, I mean, like, not they want a swimming pool to go.
right. They want to make the house
leisure.
like the way that they like.
Decent. I'm
Decent
saying
that they want.
What can they do? What can you offer to loan officer?
We as at Cross Country Mortgage, we have the so-called renovation loans or renovation program.
Okay.
As far as a loan officer, you need to be certified for that. I'm certified.
You got to be certified?
Yeah, you have to be certified.
Oh, wow.
I'm certified to be.
You go to a class?
You go to a class. You have to do a test, and you have to pass, and then you go. And these renovation loans are not bad. You can make any house, the house that you want, livable. There are the program are from FHA. It's offering FHA.
Okay.
It will be offered as a conventional with Freddie and Fannie. You can go as a minimum of $35,000 that you can spend until whatever it takes to make the house that you want.
Okay. Depending what the after value would be too, right?
That's where the realtor come in place. I said, because I say, hey, Greg, let's see, I'm a buyer. Greg, I have this. You said this house is $280,000.
Okay.
But if I spend $100,000, is this house is gonna worth the $380,000?
Is it worth? Yeah.
And that's where the realtor come in place with experience and everything. I think it will maybe even more.
Okay.
And then that will work.
Now, just a question. So, how do you like? Is there just certain contractor you got to hire for that? Or who?
We don't suggest any contractor or builder. It's up to the.
Can I hire my
board.
guy that I find at Home Depot in the morning? No. Can I?
Well,
sorry, it's a real.
He has to be insured.
I'm talking about real
Okay,
life.
so
He has to be
okay,
insured.
like how much red tape? Okay, fine. You know.
That's our problem, right?
Yeah, like because some people.
Let me tell you this: the borrower is not allowed to buy the materials or anything. Like if they can find it cheaper, they cannot do it.
Well, here's I'm just telling you just the how some people's mind works. They're like, oh, I could get a loan. Okay, my dad's electrician.
Yeah.
My
But
uncle
they
does.
can do that as long as they are insured.
If they're insured?
and they are
Licensed,
licensed,
So what is it,
bonded.
like, they have to send like forms to the bank, or what do they?
Well, they have to provide the bid. You can allow
so
up to three bid. So you can use up to three contractors.
So the 3 bids.
Yeah, 3
And
bids.
the bank reviews them.
Reviews them and-
is this after closing or before closing?
No, it's before when you started.
When you start.
When you started on it.
But then after the closing, I heard, correct me if I'm wrong, not an expert, I heard then you do disbursements to the
So
bank.
there is a two different draw. There's the initial draw.
Okay, initial draw.
And then it is at the closing, the closing draw, and then you are allowed to live in the house within 6 months.
Okay.
So the work needs to be completed.
I mean,
within
you have
6
to
months.
go. You have to live in the house
So the job needs to be done within
Okay.
6 months too.
Okay.
And then everything. So I mean, there's a lot of things people will like. They will like a bathroom in a certain way.
Nice.
Some people can use even for the most appliances and stuff like that. You know, the water reclaimer or the.
But
the
yeah,
one-
but it has to be above 35,000.
Well, no, it doesn't have to be about. You can do up to 35 for FHA.
Oh, up to 35.
So the FHA is 35 is after 50,000 or at 50,000 that you need an out consultant.
Oh, okay. So after 50, then
Yeah,
go
you need
down.
an out consultant. And for conventional, there is the home style renovation, it's called,
Okay.
and for Fred, it's called choice renovations. They're both the same. They work the same.
Nice.
And it's just one closing. It's
Nice.
easy now that the.
So how do you explain all this stuff to your client? Like, what do? You just talk with them on the phone, give them all this freaking stuff, like, you know, or are you meeting them? Like, what do you? I didn't want to.
Usually what I do right now, because there's not so much a face-to-face meeting like in person, I do a lot of Zoom meeting.
You
so
do
they
Zoom?
They
Okay.
do Zoom meeting. I like to do Zoom if we
Do
can.
you meet
if
in
we,
person?
Yeah, if we can't meet in person for any reason, they're busy, their schedule is not compatible with mine, then we do that Zoom meeting. But I like to meet like in
Okay.
person. I think it's better. There's more interaction. The personality comes in
Yeah.
play, and you get to know the person much better. He gets to know much better, so you can gain your
So
trust.
you're willing to meet them.
Yeah, I'm willing to
You're
meet them.
local.
Yeah, I'm local.
Right, you're local. You meet
Yeah,
them. Okay.
I went to meet one of your clients back.
You did?
It was I don't know what it was in York City or something.
Yeah, you did. Giving you like with me, I don't ask too much. You know, it's not in my business. Technically.
Right.
I just want to make sure they could afford it. But when you come and play, man, you gotta get. You're asking everything. You're asking even for their blood, their pay stub, their mom name, what's going on.
Wait, the
background.
documentation is not
You
really
know?
the issue because
Okay.
the documentation is still the same that
Okay.
you do when even if you get
So what's the biggest
even
issue
if you
then?
get a personal loan, you need to show them that you make the money. You need to
Okay.
show your W-2,
Yeah,
you need
yeah,
to
yeah.
show your pay stubs
Okay.
and stuff.
What's the
like that.
biggest issue you think? For you, for your job, like I
So
call
the
it our
biggest
job,
issue
the biggest
is
issue.
the assets of buyers. So they're really not that. They just have a barely enough
Wow.
for the down payment and the
Because
closing
you
costs.
need reserves too, right?
It
Most of
depends.
the time. Depend what property.
For
but
single family home,
yeah.
you don't need it. You will need it for multi-property.
Multifamily,
Multifamily, you need it like a 6 months of that. And
Yeah, makes sense.
You need to have that. You don't have to spend it,
Yeah.
but you need to have it in your bank. And
I mean,
it will
it's
be a
not-
challenge for a lot of people
A lot of
because
people.
it,
What is your? Sorry, I'm pounding you with
No, go
questions.
ahead.
You know? What is your, so right now, like, what do you see, like, you know, with your files and everything? Is that the biggest struggle with a lot of people? People who don't have a lot of. And the reason I'm asking because, you know, we're talking about economy. We talked about in the first part. You guys talked about
rates, the
rates,
Fed.
and Fed. I'm just trying to figure out like what is happening out there behind
the financial
scenes
situation back-
with the normal person
Financial-
working 9 to 5, not the guy who does TikTok and makes all this money.
Yeah, no,
or
there's-
stocks.
yeah,
like
that-
a normal guy, everyday normal guy.
There is a financial challenge.
There's a financial.
There is a financial challenge, and that's where a lender will come and play to just find any free money that we can get, like a down payment assistance.
But what's
now
the
with the
biggest-
states,
Yeah.
we have our own that we can offer. There is other stuff you can do as far as getting
I know.
some money.
I guess what Greg's trying
Lender
to
credit, seller credit.
You try to help them out.
I try to help them out.
But is that what you're seeing? Like
the biggest hurdle is it they don't make enough income? Is it they don't have the assets?
No, the
Is it-
income is actually fine.
The income's
It's
fine.
the assets. that's
So
the
it's the
problem.
assets stuff. Like
Most-
they don't have
most
a lot
time-
of, they don't have a nest egg. They don't have a lot of stuff saved
exactly.
up.
You
so
know.
that to me translates that people, you know, life is expensive.
Yeah.
And they're
Yeah,
spending
life
their
is
money
expensive.
because,
Yeah.
you know, right?
Yeah, the life is expensive. We know.
You're spending your money. You got your car payment. You got your rent. You
You-
got your, you know, your Apple phone, the bills, you know, all this
Yeah,
stuff.
and
then-
everything costs. And even though
everything
the
costs.
inflation went down, it's still expensive for the majority of the people. You know, it's
Inflation
still,
hasn't gone down.
I think it got
I mean-
down. It stopped. It stabilized.
just
it's
stopped,
stabilized.
yeah, and then
I
it
mean,
go down,
it's-
yeah.
I mean, some people,
opinion, you know?
some people said, I mean, I don't see anything going down because you know the things are almost the same. What did it drop? 20 cents? I mean,
No, everything's
really-
same. Yeah, you're right.
I mean,
No,
it's really
nothing has gone down.
and obviously, the more you go into the future, the more things are going to cost more. But obviously, people are going to make more. You know, but like you were saying, I think the growth on the income kind of like a stall a little bit. So, but let's hope that things are getting better pretty soon. But the most challenge that I encounter is the assets.
the assets,
It's the
like the
money,
down
the
payment.
so-called money in the bank.
Yeah.
You know, they don't. They have it barely enough. Or you find some great people, good people that have like a lot of money. I'm gonna close in 5 days. A client that there are
they're
2
decent.
kids.
Yeah.
They had a master's degree.
Okay.
And they work a good paying job. They make like over 300 both together.
But they saved though.
They saved, and they have a good savings, and what they did is, hey man, I don't understand. You have a mortgage, you have a master's degree. How come your credit is so clean that you don't have a student? No, what happened is that when we got married, we received a lot of money. What we did with a lot of money, we paid all
They
our
paid the student loans.
all of
Wow.
them out, and.
Yeah.
They
So
had
they were-
like
yeah,
they're,
they were-
buying 700,000 condo in Chicago,
Yeah.
and the DTI is like 29%.
Yeah, it's pretty good. Yeah, but again, they were like
They're professionals.
I mean, the people that they kind of like they know how to save, they know how to overspend, because obviously, like Greg was telling me before, there's a lot of people that live paycheck to paycheck.
I think there's quite a bit.
There's
I think
quite a bit. And it's,
We've
you
been
know,
talking. I think, you know, I mean, it's just tough out there. Like, you know, there are some people, like, you know, they're making good money, and then
The
there's a
good
lot.
Greg told me you have to have at least 1 year of salary saved. at least.
I mean, if you're going to,
If,
you know, like
if you're going solo.
if you're going like solo business.
But
or,
even
without,
for every,
it's important. No.
It's important to have. I mean,
It's important.
Not a lot of people
100%.
have. That's actually not a lot at all.
1 year, yeah, it would be good. But the everyday guy, it's tough out there sometimes.
Yeah,
you know?
sometimes circumstances get them, right? They have, you know, they have their kids. Something happened with a kid. They got to move. They got this, or a bill comes up.
But I feel like how we,
lose
you know, I think most of us, right? We're more, you know, like from, I don't want to say poor backgrounds, but like humble beginnings, right?
Yeah.
And that's why I'm trying to find out. I like to help. Besides, I'll help the luxury. I'll help the $1 million guy, 2, 3, whatever. But I like to help the little guy. And the little guy right now, I feel like is becoming even more little because I don't want we become like California. California is nice, but California, I don't want that the country becomes California where you have the rich and the poor.
Yeah.
And that's it.
Yeah.
You got the guy that has a big house, and then the guys are on welfare and don't have nothing. Or even worse, they're on the street.
Their houses are. It starts 800,000. So
Small houses.
Yeah, like a knockdown.
Yeah,
So it's
yeah,
like
it's
you got.
true.
But I'm saying like the the person that's making let's say $20 an hour or $18 an hour, and it's expensive out there. What can he do like to make make more money?
Yeah, you have to
get out of
you have to buy within your means.
I think you got to buy within your means, but I think if you listen to Luca's story, he came here.
Okay.
A car salesman. It's like, hey, I'm not knocking on it, but like just like there's a lot of realtors, they get their license because they don't really. Maybe that's the only option they have, or they think it's their best option. They go in and it's sink or swim. You got in. You used it to learn. You used it to learn your language. You used it to meet people.
Okay. Yeah.
You used it to find another opportunity, and you proved yourself.
I learned how
you got an opportunity, and you took it, and then you went there. And there's another stepping stone. Like, I think some people got to realize, okay, you're working $18 an hour.
Okay.
Now is it a big company? Is there a corporate office? You got to kind of use.
So almost like individual growth, right?
Yeah, you got two options. You could cut your bills or increase your income. That's it. That's all.
Yeah,
Those are
that's true.
Unfortunately,
That's true.
there's no magic. I tried. I'm sure
true.
you tried.
I remember Frank
I did try.
Frank was working before at the corporate job
absolutely.
while doing.
I did it,
with
and I looked and thought and stayed up late at night, and it's like, okay, I have two options. I could cut what I spend, which is always good if you can do it if there's extra money.
But there's so much you could cut.
There's only so much, you know.
Yeah.
There's only so many corners, and then
Some
you have a
costs
circle.
are like
There's no more corners.
standard, and they stay
Yeah.
like this until there's nothing you can do.
And then you got to figure out, like, okay,
improve yourself, right?
You got to improve yourself.
improve
Maybe you
your-
got to go
yeah.
take a class. Maybe you go get
Improve your job.
Yeah, like I
Or-
did it part time. I did this part time.
You were part-time,
so
yeah.
I did my job and I did this, and
Yeah.
this was extra, and
Yeah.
that's. I mean, that's what
So you
that
work-
was a difference.
you worked two
That was a
jobs.
difference.
You worked two jobs.
That
Yeah,
was
that-
a difference.
then, you
that
know,
was a difference.
obviously,
I didn't just jump into this and then okay, now all of a sudden all my problems went away.
No, it didn't. Yeah.
And you still have problems even when you're.
And with you guys, it came a little easy in the sense you guys have a good personality, and
Yeah.
that's why you will
I mean,
be able to be full time.
So
It helps.
Who does not want to do business
this
with you,
job.
man? Who does not want to do
I don't know,
business?
but I asked myself that. No, just show.
No. For this job, it helps, right? But then I met people like introverts, and they're not big, talkers and everything, and they still work two jobs, different kind of jobs, right, behind the scenes, and they grew too, little by little.
I mean, I'll give you an example. My corporate job, I probably wasn't the best at it. I mean, I used my personality to smoosh people to like help me because I can't sit there for 10 hours and look at a spreadsheet. I can't. The guy who sat behind me, opposite of me, he loved it. When we would have like when we would have a company party, the guy was like a wreck. He was like hated it so much, and I was like, oh, cool, we're gonna like get together, we'll hang out. He was like, so for him, he could excel in that field. Like he could do this. We had a guy that was a programmer, and it was incredible what he could do. I couldn't do that. So you got to kind of look at yourself. What do you love? You don't have to like love what you do. Like you love it. It's like you're watching a sporting event. You love it so much. But look at you got to look at what you're good at. And try to find something in that.
Find your niche.
Yeah. I mean, you're not going to be in the NBA. I like to play basketball. I'm going to be in the NBA. But you got to be realistic. But
and sometimes you don't find your niche, right?
Yeah.
Maybe nothing stick. Then you just gotta
I was doing my niche. I was working until this, and then like this kind of worked out for me, and that's it. So that's
it makes sense.
that's
and like a Greg story. Your story was like you were working at a bank. You will see all those realtor and okay.
But you think?
This is something I think I can do.
Yeah, but that wasn't a
And-
waste of time. He worked there. It wasn't a waste of time. He met you.
No, he
used it
met
to
people,
meet people.
you know.
Absolutely.
You learned all the stuff about banking. So it's
100%.
like when you got into this,
Yeah.
you didn't have to learn about that stuff.
I have no regrets of nothing, even
Yeah.
when I worked at a dollar store.
Yeah,
No,
you,
I
you
mean,
didn't- you didn't-
I learned something
So
from
like
everything.
you could
Yeah.
take you could look how the business is run. You could work at a restaurant, look how the
Yeah.
business is run.
You could.
I mean, my
work at-
wife, when she met me, she for sure she thought that I was going to come here, and some of her family members, they have a brick paving company,
You were gonna work-
landscaping. She thought I was working, which I didn't mind. But I found this guy. It wasn't on a poker table, and this guy was a friend of my wife's cousin. He owned a dealership. And now his dealership is up to the roof. It's big. He just retired.
Nice.
And he said, "Hey, do you know how to speak English?" No. Do you know how to speak Spanish? No. Okay, I'll see you tomorrow. Okay, oh, fine. So I went there, and the first day my first day was like, "Hey, you need to go to Hillside to pick up a car from the auction and come there." So I just went there. He showed me the street, so there was no navigation or anything like
yeah.
that. And so when he was driving, I was just memorizing every street. Yeah. And
You had no idea.
No idea. And I went there, and in one straight shot, I went back to Chicago on Edison and Cicero, near the Six Corners.
But for you, I gotta say, sometimes where you're from too helps. He's from Palermo.
Oh, man.
And everybody sells there. Everybody's a salesperson. Every single person is a salesperson there.
I mean, actually, I didn't.
Everyone is outside yelling, selling something.
And I'm going to tell you this funny story. You probably never know.
So that's why it's just in you.
I tried to sales in Palermo. I was not good at it. Then
Sales for real?
Then I came here, boom. I was
Wow.
like,
Palermo
the
is
hell
pretty
breaks-
it's
But
competitive.
but what's important is the guy asked you, "Do you speak English? Do you speak Spanish?" You said no.
No.
But you showed up the next day.
Yeah,
Yeah.
so
A lot of people are like, what am I gonna do? I don't speak.
So
They don't show up.
They don't show up. You showed up.
And my first job was like taking payment and answer the phone. And the first week and a half, the phone was ringing. I didn't pick it up because I was afraid I didn't understand. So then
That's
little
tough.
by little with my wife,
Yeah.
watching TV, a lot of Advil and Tylenol because of your
But
head.
a lot is mindset too. You had a
Yeah.
good mindset.
You have to have
didn't-
a
you
good
didn't put
mindset.
yourself down.
It's
really important.
I came here. I had a job in Italy at a factory. They were paying good. I had a property in there, so I was not really in a bad situation. It was okay, but I met my wife, and when you love someone, you just follow. And I'm glad I came here, and I'm glad that I met you guys.
Vinny. I like it. This guy mentioned Vinny, Vinny, by the way, is one of our
great friends.
Great friend, and he's a Will County sheriff, and also we did a golf event.
We did a
recently,
golf
right?
event,
For the Will County.
for the Will County.
We sponsor it.
We sponsor it.
And
We
you were there, I was
create
there.
we create a program for the Will County with the collaboration of XR Realty.
Yeah. We had
XR
Frank this
Realty.
year came too.
Yeah.
And
Yeah, it was fun. We had a good time.
Yeah, we're in Cook County, but Will is in our heart, and we also we shout out to a new candidate.
New candidate is going to be Paul Reyes.
Paul Reyes,
Paul
for
Reyes.
sheriff.
Yes,
Paul
for
Reyes
sheriff.
for sheriff.
We're rooting for you.
It's official this week. By the time the podcast comes out, we could say it. So.
You can say it. All right.
So we're going for Reyes 100%.
Yeah,
and he's
yeah.
gonna
Really
wrap it
great
up.
guy.
Good guy.
He's gonna wrap it up. And but this been great. Do a wrap. It's good. I think I had a good time. Unfortunately, I was late.
We're late, but we picked up. We look at thanks for coming.
Thank you guys for having me.
Goodbye to episode
34.
34.
Wow, 34.
See you guys in the next
34.